All right, today is Tuesday, July 28th, and this is a post-market review for the stock market activities today. The indices closed in the red today with the Dow down 205 points or 0.77%. The Nasdaq is the underperformer today. It was the overachiever yesterday, and we saw the Monday tech rally and now the fade out. This is the yo-yo game being played again. The Nasdaq down 134 points or 1.27%. The S&P 500 is down 21 points or 0.65%. Looking at the futures, gold rallied today, but it did not reach its highs from the overnight session. Silver was muted today. The dollar gained just a little bit. It paused a little bit from the declines that we've seen recently. I put up this tweet last night and I said to expect a rebound in the dollar just a little bit and cool off of the trade in gold and silver. And that is, of course, psychological because of the prices that we've reached recently. The rally is too big for now in gold and silver. We will cool off a little bit, gather more energy, and rally again because the conditions are still favorable for gold and silver, and it's unfavorable for the US dollar. However, we don't know what the Fed will announce tomorrow. We expect a huge movement in gold and the US dollar and interest rates right after the Fed's decision tomorrow. So again, the pullback is technical and psychological. A lot of investors, a lot of traders taking profits before the Fed meeting. They're taking profits in their silver and gold trades, and they're also taking profits in their short trades against the US dollar. This is a pause to reflect and to wait until the Fed decision tomorrow. I, of course, to benefit from this little pullback in gold and a little rally in the dollar, I bought calls in the ultra short euro ticker EUO. These calls were up today. This ticker rallied a little bit in today's session. And as you can see, the euro traded in the red today. Now let's take a look at the daily sector performance. The overperformers today are real estates, utilities, and consumer defensive. You see this defensive theme in the market today. And the laggards are the tech, materials, energy, and consumer cyclicals. So we're seeing a bearish performance in the overall economy today, giving the movements in these sectors. Let's take a look at the heat map to see the action in details. Tech was down. Tech rallied yesterday, and I cautioned from following the hot trade because last Monday they did the same thing. They rallied tech, and then they crashed it later. And this week, it looks like we're having a deja vu again. Monday, tech stocks rally, and then they get muted. And perhaps after the earnings that we're going to see on Wednesday and Thursday, they might crash it. Who knows? I am net short the technology sector. Of course, we've seen hot trade like Taiwan Semiconductor cooling off today, down about 7% or so. After the bell, of course, we had AMD. AMD reported earnings, and the stock is rallying. Last time I checked, about over 7%. AMD, of course, is gaining advantage over Intel. Intel pretty much bombed and waving the white flag on their next generation chips. That is to AMD's advantage. Consumer cyclicals were losing today. Of course, we saw really horrible, absolutely miserable earnings from McDonald's. We're going to go into details in these earnings because there's something important I want to show you. The garbage stocks, the cruises and the airlines and the casinos caught a bit today in the green. Again, we've seen this movie last week where tech rallies on Monday and then fades out on Tuesday. And of course, that same day, the garbage stocks rally and then they fade out later. And it's the same yo-yo game, back and forth, being played again. Notably in the banks were muted, but Bank of America caught a bit today. Warren Buffett continues to add to his stake at Bank of America. No comments from Buffett about his investment in Wells Fargo. The consumer defensives, of course, caught a bit today, rallied by Procter & Gamble. Procter & Gamble is about to report earnings, but we see a defensive formation in the market. Real estate, utilities, healthcare, of course, on the heels of Pfizer's earnings, catching a bid and closing in the green today. Yesterday was risk on, today risk off. One day it's with momentum, the other day it's with value, one day it's with reopening stocks, the other day it's with stay at home, back and forth, the roller coaster ride continues. If you are trading this market day by day, you're going to have a massive headache. So you better have some macro standing on the market overall. Now, let's take a look at the charts right away so we don't forget about them. The SPY, the S&P 500 closed in the red today. As you can see, it's still struggling to break through the resistance line. And if we actually dive into the 15 minutes chart, you can see that we reversed from the reversal line, from the resistance line, excuse me. This is bearish look, not a very good look for the SPY. We had a massive catalyst today of the Fed's liquidity being extended till December, and that did not help the market at all. So we're waiting for stimulus. If stimulus doesn't do it, then what else? The SPY is struggling to break through this level, and I explained to you in previous videos what will happen next if we continue to struggle. Further downside and a correction, just like we've seen in February. Here is a daily chart of the Qs. You can see the Qs had a big rally yesterday. Today they're reversing. Very bad and weak look in the technology sector. And again, notice on the chart that we are making lower highs and lower lows. This is not good. What does the chart have to do to convince you that we are about to downtrend? It's making lower highs, lower lows. It's giving you time to take your profits and to make new formation in the market in terms of your trades. If you don't respond during this time, the next move in the market will happen so fast, so violent, you will not be able to catch up with it. This is the time, the pause, the cooling off, giving players in the market and traders to change their bets and to make new bets. Now, let's take a look at today's activities in a 15 minutes perspective just to show you the yo-yo game that's going on. Let's take a look at Amazon. Amazon is a representative of the stay-at-home stocks, the momentum stocks. Started trading in the green and faded throughout the day, and the fade out and the sell-off accelerated at the end. Closing bell. Contrast that with Norwegian Cruises, today's representative of the garbage stocks sector. It caught a bit in the morning and it continued to catch a bit all the way till the closing bell. Likewise, defensive, the yields. Let's take a look at the XLU from a 15 minutes perspective. The utilities sector, again, catches a bit in the morning, continues to rally all the way to the closing bell. What about the dollar? Let's take a look at the dollar. The dollar is pretty much having this pin look, which is a pause. Let's wait and see what happens tomorrow with the Fed. The dollar, of course, took a massive hit in the last few days, and now it's pausing. Any decision from the Fed that would be favorable to the US dollar will force short covering, and the dollar will rally in the short term, and you'll see precious metals like gold and silver reversing to the red. Speaking of gold, let's take a look at the futures. The gold chart almost made it to 2000, surpassing the 2011 highs. Sold off a little bit, yet closed in the green. It remains bullish, but as I said, expect a little bit of softening and weakening in this trade. Specifically silver. I cautioned you against silver because silver attracts short-term traders and gamblers, so they are more susceptible to taking their profits quickly compared to gold investors. Again, any pullback in gold and silver, give it a few days, maybe a few weeks, and then enter the trade again because the long-term conditions for gold and silver are very favorable. Let's now go on into some updates about earnings that we saw this morning. McDonald's reported before the bell today. Here is the headline for McDonald's. The sales, the revenue is down over 30%. McDonald's was a disaster. No two ways to look at it. And if McDonald's is weak, this is the defensive name, the cheap name, which is more accessible and easier for the customer to purchase from. How do we view now the tech sector or more expensive items when we talk about the health of the consumer globally? Here are some of the results snapshots that I took from the quarterly report of last quarter, quarter one, and this quarter, quarter two. Here is what I want to show you. For the first quarter, last quarter, when we look at the growth year over year for the same quarter, sales in USA segment was up about 0.1%, barely green here. The international sales were down 6.9%. This is last quarter, year over year. If there is any V-shaped recovery, then we should expect this quarter, year over year, to trend a little higher and more positive. But here's what happened in reality. Quarter 2, year over year, USA down 8.7%. And here is the bomb. In the international segment, sales are down 41.4%. McDonald's sales are trending lower and lower. There's no V-shaped recovery here in sight. This is a disaster for McDonald's, and it has larger implications on the overall restaurants, fast food, and consumers globally. We also had Raytheon, aka United Technology, reported earnings today, and they're saying that they will shed 8,000 jobs. 8,000 jobs, that's a huge number for one company to shed in their aerospace business. And basically now they're going to concentrate in their defense business. We have another industrial giant, 3M, reported today. And of course, Q2 earnings were down significantly to the point where the CEO withdrawn the guidance. So all the masks that they've sold and all the PPE that they sold, it didn't matter. At the end of the day, their core business is down. There is no recovery here. And 3M took a massive hit today. Another company that reported, of course, Harley Davidson missed in they were expected to report a slight profit. They actually reported a massive loss. However, the stock reaction, it opened down over 8%, but it rallied throughout the day, I think closed slightly in the red. The reason could be a restructuring here. The CEO talked about restructuring, reducing costs. Remember, this is a name that rallied significantly from the bottom, so it has a lot to show. These were not good results at all, but remember, Harley Davidson will benefit from the weaker dollar environment. So maybe investors like the restructuring plan and the outlook for the dollar and bought the stock on weakness. We also had Pfizer. It doesn't matter what they reported. The numbers don't matter. I told you that in my earnings week preview. It's all about the vaccine. Once they announced that they're moving to phase 3, the stock rallied no matter what earnings they reported. The CEO throwing a fit, saying that he is rethinking the expansion of drugs in the United States if the Trump administration goes on with their plan of lowering drug prices. He says that this plan of lowering drug prices will have drastic consequences overall for the pharmaceutical industry. Give me a break and cry me a river. We just gave Pfizer over $2 billion of taxpayer money to fund their vaccine trials. And now, can they pay us back a little bit temporarily by lowering their drug prices? No, they can't, because they're evil. They're in the business of greed and exploitation. That's what they do day in and day out. The administration better grow a pair of balls and tell Pfizer to get lost. And you know what? We're taking the $2 billion that we just gave you. We're only going to pay you when you develop the vaccine and it is successful. And about lowering drug prices, we're going to move through with that, whether you like it or not. We need to be tough on these companies right now. They had it so good. They have over $10 billion from taxpayer money in the Operation Warp Speed. And in the new stimulus bill, they're also proposing more billions and billions for these pharmaceutical companies to develop the vaccine. By the time they actually cash the money and develop the vaccine, we would have already reached herd immunity. This is a scam. The pharmaceutical companies are benefiting from it, and there's no watchdog whatsoever in sight. We had bad news on the airline industry too, from the IATA saying that the recovery is now pushed back or pushed further to 2024. They say that the rebound was weaker than expected, and they're not seeing a recovery in Europe. When they reopen traveling, there's no recovery here. So the airlines that are adding more flights in their schedules are actually facing more cash burns because the consumer is not flying and not meeting the supply of flights. The question here for the government and for the Fed, if the recovery is going to take all the way to 2024, how long and how much are we going to spend on propping up these zombie airline companies? We gave them about $15 billion each in combination of liquidity, bailouts, and debt that they raised. $15 billion each was enough to make them survive for this quarter. But if we're going to continue this crisis into 2024, as the IATA says, there is no way possible we can spend more billions and billions to keep them alive. At some point, we have to let the capitalist system take its course. Now, let's talk about the GOP bill, the new stimulus, because this is important. I told you that the stimulus is going to be the new vaccine. Oh, stocks rise based on stimulus hope. Stocks go down based on stimulus pessimism. Here is the details in the GOP bill, and the devil, of course, is in the details as usual. The bill will take out the $600 a week that a lot of unemployed Americans are taking right now, and it will limit it to 70% of your previous pay if you're unemployed, for a maximum of $500 a week. That's the federal aid in addition to the state unemployment aid. They're also giving Americans another $1,200 for the people who received them before. That is good. Now, here's the catch. They're adding, and Mitch McConnell came on CNBC today and said this is the point that we will not negotiate upon: the liability protection. This is, of course, designed to give the biggest corporations in the world and employers the protection from being sued if you employees get sick while working for them. If you catch COVID, you cannot sue your employer under this bill. This is the biggest catch in it. Pay attention. They want to drag us back to work by the ears, and they want to say if you get sick, you cannot sue your employer whatsoever unless it's extreme negligence. And we know the kind of loopholes they're going to put here for extreme negligence. Their goal, of course, is to get more people to work quickly and to protect the corporations from any lawsuits. They want to up the employment number. They want to make the unemployment number as favorable as they can before the election, because they know if unemployment continues to trend down, that would be very bad for the re-election prospects for the Republican Party. Now, make no mistake, the Democratic proposal is also disastrous. They want to spend more, they want to give more with no oversight whatsoever. So both parties are out of their minds playing with our money. Furthermore, in the GOP bill, they're proposing $190 billion more in PPP loans. Now, we've seen the scam that happened in the last PPP round. Millionaires applied for them and they got it. Hedge funds, golf courses, country clubs, big corporations who have small businesses as subsidiaries were able to score some money. I've seen a story of a Florida man yesterday who got over $3.9 million in PPP loans and used them to buy a Lamborghini. Here is more looting in the treasury. What are the conditions of receiving some of that $190 billion proposed in PPP loans? You got to have less than 300 employees and you got to report a downturn of 50% in revenue. So your revenue have to be hit by 50% or more. No specification of what period, of what month. So are hedge funds qualified here to take some PPP loans if they lost some money, if they lost 50% of their revenue? Hedge funds don't have a lot of employees. Here is the loopholes and the looting that will come again. We have more tax credits in the bill. It says enhanced employee retention. What the hell is that? Probably another scam for corporations to have tax credits. Enhanced employee retention reminds me of enhanced interrogation, aka torture. And they're, of course, going to give 100% deductibility of business meals. So expect some corporations to report billions of dollars in business meals. And here's another one. They're proposing $1.75 billion to build the new FBI headquarters. What the hell is this has to do with the coronavirus stimulus? All right, what do we have tomorrow? Of course, we have the Fed, big Fed day. We've seen the Fed today. The Fed extended its lending facilities from September. They said that the lending facilities are temporary. They're going to last till September and they're off the table. They've extended it today till the end of December. And they were likely going to extend it more and more because I told you this is the cocaine business. This is the Fed's coke and the market is addicted to it. And the market is saying, hey, if you don't supply me with more coke, I'm going to throw a fit. I'm going to have a withdrawal. I'm going to crash, make you look bad. The Fed says, all right, calm down. I'll give you more coke. How long are we going to have this coked up market? And of course, don't forget that we have important earnings that reported after the bill today and some more coming before the bill and after tomorrow. Make sure to view my video on the earnings preview that I did yesterday. And of course, we're moving now into the more important earnings, the tech sector. We're going to see Facebook tomorrow and more names coming tomorrow and Thursday. These names are very important. They will shape the destiny of specifically the NASDAQ. We're seeing significant weakness in NASDAQ and trending down. Will the prophecy take place? Will the charts gave us a lot of hints. Lower lows, lower highs. Will that materialize after tech's earnings? We shall see. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.